Okay friends, so today we're going to run through the latest property news that you all need to be aware of, along with looking at why waiting till next year could be the best time to buy a property, along with some tips and tricks on how you could get yourself a house potentially easier through negotiation. So with that, let's smash up that like button and jump straight into this. So the mortgage panic is over, but here's why there's plenty of pain still to come. Now, obviously, many of you know that there has been a mini budget reversal. The Chancellor Jeremy Hunt's U-turn on the budget has brought a relief for homeowners, with early signs that soaring mortgage rates could now dip, or at the very least slow down. And Mr. Hunt's reversal of almost all of the mini budget's tax cuts, which we will go on in a little bit of detail later on, my friends, has strengthened the pound, it's pushed 10-year gilt yields down below 4% and stabilized market interest rate expectations, which of course we're hoping will reduce the need for further mortgage rate increases. Now, what I wanted to touch on this article, there's a few things that are quite important, is that if this happens, and again, a lot of this is expectations and people forecasting, a homeowner refinancing a £200,000 loan as of May next year would pay £83 less in interest compared to the previous forecast. Now, of course, this isn't necessarily a saving based on obviously how things were, let's say 2 or 3 months ago, because payments will still be going up. So please do keep that in mind, my friends. Now, just to quickly show you, I thought this was a really cool infographic as well. It just shows mortgage rates are soaring, and a couple of things that were quite interesting. And again, from refinances and getting mortgages myself, normally speaking, a 2-year is generally cheaper than a 5-year, yet we're starting to see a little bit of a change here. So again, I'm not sure what lenders are thinking. Maybe they're thinking that things will potentially go down a little bit, so they're trying to get as much interest as they possibly can from their loans by securing people with 5 years. And obviously we can see the timeline and just look at the last month, how things have changed. And we've reported on all of these on the channel, guys. So if you want to go back and just look at those, please do. But from Liz Truss becoming a prime minister, things just went crazy. And obviously we had this really fun day where lenders pulled hundreds of mortgages. Now, for now, we do expect to see some existing downward pressure on house prices and transactions to be tempered, if only a little, states Mr. Bowles, who's a Savills estate agent. He said that lenders are still launching and pulling rates pretty quickly, and fixed rate terms could continue to rise in the short term. Now, a couple of things I want to touch on, guys, is obviously we know the overall number of mortgage deals available on Monday remained virtually unchanged. However, it's still down by 20% since September 23rd, according to Moneyfacts. And what this article does explain, that if there is a dip in mortgage rates from obviously the expectation and where we are now, we're not talking about rates dropping back significantly. So we're not going to get the cheap lending that we've probably been used to in the last few years. We're talking maybe some improvement around availability and just a slight drop in rates. And when it comes to investors, they're expecting that the Bank of England will raise the bank rate by a whole percentage point up to 3.25 on November the 3rd. And this currently remains unchanged, but we know how quick things can move. And just very quickly, here are the market predictions of base rates in spring 2023, before Truss became PM, the mini budget aftermath, and Hunt's emergency budget. So there has been some level of, let's say, confidence, should we say, although obviously everyone's uncertain, but it has at least reversed the trend here, because it just seemed like it was spiraling out of control. Now, one thing we need to recognize is that inflation will obviously be higher, and it may stay that way for a while, and household real incomes will obviously fall by more. And as a result of that, the recession is going to be tough. So there is a video, guys, if you need a hand with any tips and tricks on the recession just here, please do check that out after this video. Now, current wholesale prices suggest households can expect a 73% increase in energy bills in April, should they not receive further support. So again, that video will help. And this is just something, guys, please prepare yourselves for. Next up, how cash buyers are winning from mortgage market turmoil. So you've all probably heard that statement, cash is king, right? And if you've got cash right now, you can definitely get yourself, I don't know if you want to call it a bargain, or at least get yourself a property that maybe you may not have been able to get a few months ago. Because what we're seeing recently, according to Hampton's agency, is that more than 30% of newly registered buyers were now purchasing with cash, showing that people with cash on the sidelines are now looking to take potential advantage, because again, they don't need to be worried about these high interest rates that we saw previously. Now, cash certainly remains king in the market, just as I mentioned there, and being able to offer cash to a prospective vendor, it definitely has its benefits, which we will touch on in a short while. So UK house prices, as many of you know, have risen in October despite economic turmoil. And a couple of things I wanted to just pull out from here, which I think is useful, my friends, is that the demand for first-time buyers has now dropped as mortgage rates surge. And this is understandable, because not only affordability-wise from a lender's perspective, but also people now need to be aware that taking on a loan that they were happy with maybe 7, 8, 9 months ago is now going to cost them a lot more. And obviously we know everything else is becoming increasingly more expensive. So let's just jump into some quick predictions here. We have Halifax reporting marginal decrease in sold prices in September, and the RIC surveyors tipping the end of the 13-year housing boom to happen next year. So let me know what your thoughts are down below. Are we going to start to see a slowdown? Are we going to see prices drop next year? Is next year the time where if you're looking for a property, that's when you should be moving forward? Let me know, my friends. Now, first-time buyers demand was 21% lower in the last 2 weeks compared with 2021, but still significantly higher than 2019. However, it said some new movers had paused their plans in face of uncertainty over prices and rates. I'm seeing this a lot. A lot of people are asking me, either over on the Instagram or on here, what should you do? Now, guys, this is a really specific question. It's a loaded question. There's a lot more context that is needed. So please do speak with your brokers and look at the opportunity cost of choosing one option rather than the other. Now, Rightmove has said prices were likely to drop in November and December in line with normal seasonal price changes. Now, some aspiring first-time buyers will have had their plans dashed by the sudden nature of mortgage rate rises and now face a difficult situation with rents also rising and a shortage of available homes. And that continues to be a problem. Moving on, let's just quickly look at the government's U-turn on the previous mini budget. I'm not going to bore you guys too much with this, but almost all cuts announced in the last month mini budget in a major U-turn for Liz Truss's government. Now, the following tax policies will no longer be taken forward. I'll just quickly highlight this, maybe screenshot this. I don't want to spend too much time on it, my friends. But here are some opinions that I thought, they make a lot of sense. We have the cut to stamp duty will help stimulate buyer demand within the market. Overall market health will be far better maintained by stabilizing the mortgage sector, I agree, and our ability to fund a property purchase in the first place. So looking at things like affordability, there needs to be something there if, of course, they want a healthy property market. Now, stability in the gilt markets will bring positive movement for those looking to borrow, but it's important to understand that we aren't going to return to a sub 1% base rate, and homeowners must be prepared to pay more in mortgage costs when climbing the ladder. So that's just unfortunate. If you've waited until the last few months to buy a house, my heart goes out to you because now it's going to cost a lot more. So please do obviously take that in mind and just factor in those extra costs. However, how can we secure a property bargain in the buyer's market? Now, this is interesting, and this is stuff I have spoken about on the more educational videos on this channel. We know that demand for buyers has dropped by 20% in the last 2 weeks, according to Zoopla, creating a buyer's market in many areas. Now, remember, every area is different. We have a slump of 10% forecasted over the next 2 years, according to estate agents Knight Frank, potentially giving more opportunities. And a couple of months ago, let's be honest, even in the last few years, asking for double-digit discounts was rarely going to happen in the UK. You would have got laughed at, according to this quote here. And I can kind of agree with that. It was a very, very tough time finding, let's say, deals for an investor. Now, we're in the market where sellers are open to sorts of discussions because there is far more flexibility and a pragmatic approach starting to emerge in the market. Now, this is interesting stuff because if you are out there and you're trying to buy a property, this will help you, my friends. How to grab a bargain. Mr. Hopper said that prospective homeowners can improve their chances of snagging a better deal by showing sellers they are a reliable choice. Now, before I got into this game fully, I always used to think the highest price wins, and that's the person who's going to make the sale, but it's not. Reliability is so important. And there's other factors as well that we will touch on as well, such as flexibility, rapport. These are all really important things that are often overlooked because we think that cash will always get the purchase done. It doesn't always work. So there's a lot of uncertainty about people who've had mortgage deals pulled or haven't rechecked their finances and don't know if they can still afford what they thought they could have afforded maybe a few weeks or months ago. Again, a very, very interesting point here. So 1 in 3 transactions generally, I think that was the last stat I've seen, fall out of bed. So if you're selling something and you need to sell it quickly, would you sell it to someone maybe for a couple of grand less if you were more certain that that transaction would go through as opposed to somebody in a chain who's got an agreement in principle that's a little bit old? Let me know, because I'll tell you what I would do. I would go with the certainty if it meant that I wasn't making a huge loss and I was comfortable with that sale. So what this article then goes on to say is if you can demonstrate that you're organized and a strong purchaser, preferably who's willing to offer a degree of flexibility, because there's a lot of sellers whose plans have obviously been shaken. That's very valuable and very attractive to sellers at the moment. Again, kind of what I was alluding to there. And also not relying on months old agreement in principle. So mortgage in principles, agreement in principles, these are things that you get from your broker initially, and it kind of tells you what you can borrow. But guys, in the last, even the last month or so, things have changed massively. So if somebody came to me with an agreement in principle, let's say from August, I'd be a little bit skeptical and I'd probably want that reviewed because obviously with higher rates, could they still afford this? And the last thing you want is go through 2 to 3 months of conveyancing and then find out that they can't afford it. And to add to that, we also know that banks have been withdrawing some agreements over concerns that borrowers can no longer afford the same mortgage sizes due to rising rates. So pretty much what I just said there. Now, what Mr. Hopper said is that buyers should first take the time to listen to what sellers' motivations are. We need to find the pain point. Why is that particular person looking to sell that property? For some, it may be price. Absolutely. I'm not disagreeing with that. But for others, it may well be timescales or flexibility. And this is where people say cash is king, because the speed of the transaction and the certainty can definitely get you that acceptance from a vendor when it comes to trying to buy something. And finally, my friends, just to kind of summarize all that, we are deemed with the strongest bidder rather than the highest bidder. So you want to put yourself forward as the strongest bidder, not just the one who's coming with the highest bid. Now, one thing I also want to say as well, and this is just kind of, if you're new or you're looking to buy your first property, don't just offer 10% less and think you've got yourself a deal, because a lot of people are being fooled by price reductions. And I know if you guys are OGs of this channel, you know I've spoken about this many times, but if you are new and you've just tuned in, then the asking price is not a statement of value. Remember that, my friends. Just because someone was asking for £1 doesn't mean it's worth £1. So often estate agents may get you to list it higher. The vendor themselves may just believe it's worth more. You need to know what it's worth. And the way you can do this is by comparing and doing comparables. I've got many videos on this channel that show you how to do this or what previous sold prices were. And that's the kind of figures that you want to be looking at, because you need to future-proof yourself as well. Moving on. Why we should wait until 2024 to buy a house. Now, there's an opportune moment to bag a bargain after property prices fall. So this is interesting, my friends. Now, we spoke about the Center for Economics and Business Research, I think on one of my previous videos, and they expect prices to fall between 8 and 10%. Now, remember, guys, a lot of this is hypothetical and a lot of this is based on forecasts. But Carl Thomas stated that we expect housing market will bottom out at the end of 2023 and early 2024. Now, I just want to touch on a few points here. Falling house prices mean that the cost of a typical home will drop from 5 times the average household disposable income to 4.2 times in 2024. So this is what they are predicting, that it will become that little bit easier. And this would be the lowest ratio since 2015, making a particular opportune moment to enter the market. However, as for mortgage rates becoming affordable again, the real cost of a house isn't the price that you agreed to pay. Very, very good point here. It's what you pay across your mortgage. The actual price is the sale price and the price of the credit together. And Andrew here at Capital of Economics, a research consultancy, said in our forecast, it takes until early 2025 for the cost of buying with a mortgage to drop back to the same level as this summer. So housing affordability will not ease. Now, this is a cool little infographic. It shows mortgage as a percentage, their forecast, if house prices don't fall and if mortgage rates stay at 6%. So again, it's just cool. You can just play around with it. This is currently obviously where we are right now. So it's going to be interesting forward. And just touching on this, between April and June 2022, mortgage payments on a typical house were 41.7% of the average salary, according to Capital Economics. Now, they believe that this will soar to 58.9% over the next 3 months as mortgage rates rise. And this is worrying times, because not only do you have less disposable income, we know that that's not even stretching that far as well, with energy bills and just general costs of day-to-day living. Now, at the start of 2025, Capital Economics expect that this will fall to 41.4% by the end of 2025. So again, all forecasts, my friends, and obviously this is dependent on some decline in mortgage rates and a 12% house price fall over the next 2 years. So this is kind of, I guess, their caveat. They do go on to say that if mortgage rates stay at 6%, even if home values drop as expected, monthly payments on average home will still be near 50% of a typical income by the end of 2025. And this is why I say, my friends, we need to work on our income streams and we need to get that money up. So please do check out those videos. So when can you negotiate a discount? Now, deals are agreed several months before sales complete, and then there is an additional 6-week wait before the data is published. Some of you may know this, some of you may not know. So hopefully that helps there. But Sarah Coles of Hargreaves Lansdowne said, you don't know when house prices have reached the bottom until it's too late. So there's always some sort of delay. Now, during the financial crisis, annual house price growth began to drop in April 2008, according to Nationwide Building Society. However, this was 2 months before the falls actually began to show on the ONS data. So it's almost like a 2-month lag. Now, here is again an infographic, and it just shows ONS versus Nationwide. However, this time around, the Nationwide index seemed to be further ahead of the official data. So that doesn't mean, my friends, just look at the Nationwide index, because this only reflects mortgaged home purchases, which means it will be more responsive to rate rises than ONS. However, ONS does include cash purchases. So just something to be mindful there. And will everywhere be the same, my friends? I think we will see some regional differences myself, and this quote says the exact same. The areas that are very dependent on mortgage borrowing, namely London and Southeast, are more vulnerable. So are places where house prices have risen most recently. So this is why a lot of people feel that house prices will fall furthest in London, as you can see here, as opposed to other areas such as the Midlands and even Northern Ireland on this infographic. So how much will it cost to wait? Trying to time the house purchase against the market, it's near impossible. If you do it, you probably fluked it. But of course, we can try and have the best possible guess. But first-time buyers should calculate how much money they will spend on rent in the interim, and assess how long they can realistically afford to wait if the decline takes longer than expected. So I'm not saying, and this article, I suppose, isn't trying to say that you should just wait out to 2024, 2025 before you buy, because simply for some, it may make more sense to buy now if you can. Now, according to Hampton's estate agents, the monthly rent on average British home in August was $1,085. So if a household rented for 2 years while they waited for an 8% house price fall, they would save $23,680 on the purchase of an average home, but they would have spent $26,000 on rent, which would give them a net loss of $2,360. Not to get too much into it with that is that obviously, you know, your any sort of maintenance and stuff like that, you're not necessarily having to pay for. So we need to take that sort of stuff into account as well. Whereas if it's your own home, you're going to be putting that in. So a little bit more context is required. But friends, I'm going to leave the video there. Let me know your thoughts down below. And once again, thank you for watching.